Okay, this is our last section on taxes, and we're going to talk about a specific tax form, Form 1040, that you file with the Internal Revenue Service and the schedules that go along with it. So as we talk through this, remember there's some things that you have to know when you're filing your taxes. And the more you know about filing your taxes and the more you know about taxes, then you're probably going to be able to lower your tax burden if you're educated about these types of things. People don't like paying taxes. It's voluntary, and if you don't pay your taxes, then the IRS comes after you, and there's ramifications and consequences if you do not pay your taxes. So when you have income other than wages, like dividends or interest or pension income, unemployment income, Social Security benefits, when you receive income other than your regular wages and salary, then a lot of times you need to use this IRS Form 1040. Okay. And along with it, there's some schedules, which are just like attachments that go along with it. So there's one called Schedule B, which is used for interest and dividend income. So if you have interest from bank accounts or stocks, things like that, that income is to be reported on that schedule. There's also another schedule called Schedule A, which is to itemize your deductions that you can help reduce your taxable income. So you itemize them, you list them one by one on Schedule A, and I'll show you what Schedule A and Schedule B both look like. There are many deductions that the government will recognize that allow you to use a lower amount when it comes to your tax bill. This is just a list of these, and these are here. I'm not going to read all of them to you, but you can see that there's many different types of expenses and deductions that you can make as a taxpayer to reduce your taxable income. And there's other ways to reduce your income. Other than deductions, there's also tax credits. Okay, so a tax credit is an amount you subtract from your taxes after you've looked it up on the tax table. Deductions are subtracted from your income before you look it up on your tax table. So those deductions, that list that we just had, those were some of the deductions. But then there's also some tax credits. Two popular credits are the child care tax credit and the earned income credit. The amount of any credit is always dependent on different factors. But those are listed and figured out a lot of times on those schedules. So let's look at an issue here. So Margaret and Brian are married. They have a child. Margaret works. Brian works. This is their combined income. They have interest income of $812 and $877. They also receive stock dividends of $444 and $1,200. During the year, she also looks like she won $300 in the lottery. So we need to find her total income from wages, bank interest, stock dividends, and the lottery prize. So you can see here, this is the beginning of IRS Form 1040, where you would list the name, the address, Social Security numbers, how they are filing their return. They're filing this one. They're married, and they're filing it together. Okay. If they have any dependents, they claim themselves. They claim the spouse. Okay. So they're married, and they also claim their child. Okay. And you would also list the child's Social Security number. So the number of dependents, the total dependents, you always count yourself, you count your spouse, and then your child. So you'd have 3 dependents. So the more dependents you have, the more tax credits and tax deductions you're able to make. So we're to find their total income. Well, their total interest, let's see. Their total interest is listed right here. So you just add those together to get their interest, which would be $1,689. Okay. Now, very important, since this amount is greater than $1,500, they must list this on IRS 1040 Schedule B, and I'll show you what the Schedule B looks like in a second. So $1,500 is the threshold. If they earned less than $1,500, then they don't have to list that interest on Schedule B. They still have to report it, but they don't have to list it on Schedule B. If it's more than $1,500, then they have to list it on Schedule B. Their stock dividends, that was listed in the problem. They have 444 from GM stock and 1,200 from their Kodak stock. So those are dividends. Remember, that was basically payments from the companies as for being stock owners, for being owners of the company. They get dividends from the company because the company made money, and they give that back to their shareholders. So that was what the stock dividends, and they totaled $1,644. And again, since this amount is more than $1,500, they have to list that on Schedule B. So here's what a Schedule B looks like. You can just see it's an itemized list of where they're getting some of their funds from. The first one, this is interest. So Seaford Bank, they've got $812, and Buffalo Bank this, and there was that total of $1,689. And then the stocks, GM, Kodak, and that totaled that. So this Schedule B has to be attached to their tax return. Okay, so their total income, excuse me, this was their earned income. This was their interest. This was their stock dividends. And then I guess she hit for $300 on the lottery. So their total taxable income is $80,154. That's their total income, sorry. So now we're going to look at the income section. So we're back to the regular Form 1040. So we were right here on their 1040. We had listed their number of deductions, the number of dependents, I'm sorry. And now we're going to the next section of 1040 where we list their wages, we list their interest income, we list their ordinary dividends, and then their other income, which would be the lottery, and they even had to write out what it was for. So this is their total income. So that's what the 1040 looks like. Let me get a blank one and show you. So a blank 1040. This is straight off the IRS.gov website. Okay, so Form 1040. And there's a question in your homework that you're going to have to fill one of these out. So fill out your name, address, Social Security number. Okay. Someone can claim you as a dependent or your spouse. This is not going to be applicable because not for what we're doing in the lesson and on your homework assignment. For the dependents, you can just put child and child if there's any dependents, and then you're going to start filling out so you can see all of the interest. So wages and salaries go here. If there was any interest that they earned that was tax exempt, any dividends, IRA distributions, this is different types of income amounts that you would list. Other incomes from schedules, total income, any adjustments from income. You can just see down. Now, standard deduction or itemized deductions from Schedule A. So we're going to talk about Schedule A in just a second. So this is where any amount from Schedule A would go to. All right, and then you're finally going to end up with your taxable income. And then we're going to see the taxes. Okay. Taxes go here. You just follow the list. Okay, as you fill this out, you'll need to fill one of these out for one of your problems. And then you'll figure out whether they've held out enough money. If you've held out enough money out of your paycheck, you're going to get a refund, remember? And if they haven't held out enough over the course of the year, you're going to owe. Right? And then you would just sign it and send it in to the IRS. A lot of this is done. You can do this online, or you can fill out the hard copy and mail it in. It's faster if it's done online, and you can also get your refund direct deposit. So let's look at a couple of other examples. So a family had $1,123 in bank interest. Must they report this on Schedule B? Nope, because remember, the threshold was $1,500. So they still have to report their interest, but they don't have to list it on Schedule B where it's itemized. So they would just put that under other income on their tax return, but they would not have to fill out Schedule B. Okay. Margaret O'Sullivan teaches a night course. She had educator expenses, so she's a teacher. She had $3,009 worth of moving expenses. These two expenses are deductions, so her adjusted gross income. So these are her adjustments right here. The total to be deducted is that. So we're going to subtract that from her income. So Margaret O'Sullivan's income, that was told to us in the very first part of the problem. Actually, that was the amount that we just figured up. The $80,154. This was continuing that same family situation. So she had deductions of $3,142, so they could subtract that from their total income. So this would be what's called their adjusted gross income. So after deductions, adjusted gross income is after deductions. So here's educator expenses, and there's the moving expenses. So these types of expenses are deductible, and they're just listed right there on the 1040. So it takes it off of your total income, and now you have your adjusted gross income. Now the 1040 that I posted online is a current one for the current year, and the textbook might be a little bit outdated, but the listings are going to be the same. They're going to be correlated regardless. So let's look at another example. So they had 18,000, same family, 18,800 medical expenses. Medical insurance covered 80% of these. So they only had to pay 20% of their medical bills. Well, guess what? The IRS allows medical and dental expenses to deductions. They allow these deductions for the amount that exceeds 7.5% of a taxpayer's adjusted gross income. So how much can they claim as a medical deduction? So let's figure out, since they had to pay 20% of that, let's figure out 20% of that, which would be $37.60. So determine if they can claim any medical expenses. Let's calculate 7.5% of their adjusted gross income. That's $77,000. 7.5% would be $5,775.90. So subtract the amount of the medical expenses over this. Well, the amount of their medical expenses, 20% of that was this. Take away this, actually gives you a negative number. Since their medical expenses do not exceed 7.5% of their adjusted gross income, the O'Sullivans actually are not going to be able to deduct this medical expense. Had the medical expenses, actually, if the medical expenses are less than 7.5% of their adjusted gross income, the medical deduction is zero. These type of deductions are listed on Schedule A, the other schedule that we talked about. And here's the top part of Schedule A. So here was their adjusted gross income. Here's their medical expenses. Here's this amount multiplied by 7.5%. I'm sorry. Yes, this amount times 7.5% gives you that. And this take away that gives you a negative number, which means they cannot deduct anything at all. Okay, let's look at another one. They paid $3,298 in state income taxes and $3,567 in real estate taxes. They paid $3,096 in mortgage interest. What is the total amount they paid in state income and real estate taxes? You just add them up. Income and real estate taxes was this. Okay. The total taxes are shown in the taxes and interest section. So this is back to the 1040. You can see the state taxes that they paid, real estate taxes that they paid, and then there also, if you purchase a home and you are making monthly mortgage payments, part of that payment goes to the interest that you're paying on that loan. That interest is tax deductible, and that's what this line is for. Home mortgage interest and points reported to you on Form 1098. So this is an IRS form that you get from your mortgage company, and it shows how much interest you've paid for the year, and that's deductible as well. So see, all of these things reduce your tax liability. Here's another example. Charitable contributions. If you give things of value to charities, you can deduct that from your taxes. The O'Sullivans gave $987 to two different charities. They gave $100 here, $450 to enclose to different charities. So 987 plus the 450 was 1437. So this is also listed as a gift to charity. You can deduct it from your taxes. They had flood damage to their home. They had a lot going on this year. The IRS requires that $100 be deducted for each casualty. So this was a casualty damage to their property. Take away the $100 deductible for each casualty. So $91.30 is what the IRS allows them to claim, but only part is deductible. To find out how much, subtract 10% of the adjusted gross income from $91.30. So 10% of their adjusted gross income would be $7701.20. So $91.30 minus $7701.20 gives you this. So guess what? They get to deduct that much again. More deductions, less taxes. All right, so once they get their schedules completed, they go back to 1040 to finish their deductions. So if the deduction for an exemption is $3,500, find the total amount of the Sullivans can deduct. So they had 3 exemptions. Remember, there was 3 of them, so they can subtract this from their taxes. And that's listed right there. So you just get tax and tax credits for each thing. Let's see, we're about done here. Here we go. They work, they pay for childcare. They get a tax credit of $780. They installed some energy savings home and they can receive a $133 tax credit for that. Tax credits are subtracted from the tax found in the tax table. For example 9, the tax was $68.36. That was from the 1040. They can subtract these 2 deductions. So there's $59.23. So now their tax has been reduced again. There's the 780 and the 133. Reduces their taxes. And it looks like they're going to end up with a refund. They paid in $76.22 and their taxes was $59.23. So when you subtract those 2 amounts, you get $16.99. So they're going to get a refund, and they can choose to get a refund as a direct deposit with their bank information, or they can get mailed a check. All right, Form 1040.